This presentation is designed to help you prepare for the MLO SAFE Test, a key exam for mortgage loan officers. We will walk through the essential topics, tips, and strategies to ensure you're well equipped to pass the exam with confidence. Whether you are new to the industry or looking to brush up on your knowledge, this guide will provide valuable insights and resources to help you succeed. Let's dive into the core concepts and important details of the MLO SAFE Test. Overview of NMLSR and SAFE Act. Let's start with the basics. The NMLSR, or Nationwide Multistate Licensing System and Registry, is managed by the CSBS, Conference of State Bank Supervisors, and AARMR, American Association of Residential Mortgage Regulators. It's a system that helps standardize the licensing of mortgage loan originators, MLOs, across different states. The SAFE Act, which stands for Secure and Fair Enforcement for Mortgage Licensing Act, was passed in 2008 as part of the Housing and Economic Recovery Act, HERA. Its main goal is to ensure that MLOs are uniformly licensed and regulated across the country. Obtaining a license. To get licensed as an MLO, there are a few steps you need to follow. First, you need to complete 20 hours of pre-licensing education. This includes 3 hours on federal law, 3 hours on ethics, 2 hours on non-traditional mortgages, and 12 hours of elective courses. If you don't get your license within 3 years of completing this education, you'll have to retake the 20 hours. Next, you need to pass the Uniform State Content Test, UST, which has 120 questions. You need to score at least 75% to pass. If you don't pass, you can retake the test after 30 days, but if you fail 3 times, you'll have to wait 6 months before trying again. Each test attempt costs $110. Application requirements. Once you've completed your education and passed the test, you'll need to submit an application. For individuals, this is the MU4 application, and for companies, it's the MU1 application. You'll need to provide a 10-year residential and employment history, a credit report, and a background check. You'll also need a surety bond, usually around $25,000, which is often paid by your employer. You'll need to show that you have the necessary net worth, either through liquid assets or a sponsor. Some states also require a state fund. To be eligible, you can't have had a license revoked or have any felony convictions, unless they're more than 7 years old and not related to fraud, dishonesty, breach of trust, or money laundering. You also need to show financial responsibility, meaning no recent foreclosures, tax liens, or seriously delinquent payments. Temporary authority and license maintenance. If you're moving to a new state, you can get temporary authority to originate loans for up to 12 days while you get licensed in the new state. To be eligible, you need to have had a valid license for at least 30 days before applying in the new state and have worked as a federally registered MLO for a depository institution for at least 12 months. Once you're licensed, you need to maintain it. The renewal deadline is December 31st each year. If you don't renew by March 1st, you'll have to reapply. You also need to update your MU4 form within 5 days of any changes. Continuing education is required every year, 8 hours in total, including 3 hours on federal law, 2 hours on ethics, and 2 hours on non-traditional mortgages. If you teach, you can get extra credit. If your license becomes inactive, after 3 years you'll need to complete 20 hours of pre-licensing education, and after 5 years, you'll need to retake the SAFE test as well. State commissioners have the authority to deny, suspend, revoke, or decline to renew an MLO license. If you violate the rules, you could face fines of up to $25,000 per violation. There are also routine audits of MLO practices, and if someone files a complaint, it could lead to an investigation. Mortgage Call Report, MCR. MLOs are required to file a Mortgage Call Report, MCR, every quarter through the NMLS system. This report is due within 45 days of the end of each calendar quarter. It includes 2 main components: residential mortgage loan activity and financial condition. The financial condition report is filed annually, within 90 days of the end of the year. MLO categories and licensing requirements. There are different categories of MLOs, each with its own licensing requirements. Independent contractors must be licensed if they're performing mortgage-related duties like loan processing or underwriting, and they're not supervised by a licensed MLO. Loan originators, who take residential mortgage applications and negotiate loan terms for compensation, must also be licensed. Registered loan originators work for depository institutions or their affiliates and are registered with NMLSR, not licensed. Loan processors and underwriters, who perform clerical or support duties related to loan processing or underwriting, are supervised by licensed or registered MLOs. Congratulations on taking the next step toward becoming a certified mortgage loan officer. We hope this study guide has provided clarity and a solid foundation for your exam preparation. Remember, success comes with dedication and practice. Stay focused, keep reviewing, and you'll be well on your way to passing the MLO SAFE test. Good luck with your studies, and feel free to reach out if you have any further questions or need additional resources. Stay confident, and you've got this.